A lot of people come to me and they say the stock market is a scary place. And I tell them they're absolutely right. It is a scary place. But then I show them this chart, which is the history of the stock market from 1926 to the end of last year. The bottom line is inflation. The purple line above it, 1 year T-bills, is essentially a proxy for what banks pay. And you can see the purple line is flat the last 10 years because banks have been paying pretty much close to zero. The next green line in the middle is a balanced 60% equity, 40% bond portfolio, diversified, rebalanced annually. And then the top three lines are big cap stocks, and then small cap, and then at the very top, micro cap stocks. So the biggest mistake is people move to cash, especially when the market's volatile. And then they're losing out because that's like jumping off a building when the elevators hit the basement. You can't go any lower. Why leave then? Sometimes people look at this chart and say, well, I think I want to be on the top line. I don't think you can stomach it because a lot of folks came in to me in the last few years and said when they went through the subprime crisis recession in 2008, if you were on the top line and you had the stomach to stay in, and not many people did, it took 3 or 4 years for their portfolio to get back to where they should. So does that mean you should be on the middle line, the green line? Well, it depends. You should be in a well-balanced portfolio that plays offense and defense in any market that you can still sleep at night. So maybe it's there, maybe it's higher, maybe it's lower. It all depends. I had this couple I was working with. The husband unexpectedly passed away. There was a large inheritance, and the wife had most of it in cash, and she was terrified of the stock market. So I said, look, let's split it in half. You keep half in cash, you never have to worry about. We'll take the other half, we'll invest it below the green line at a moderate conservative 50-55% equity, 45% bonds. And if it followed historically, it would still grow 5% to 6% and double every 12 years. So in closing, you cannot avoid the stock market, and you need a portfolio that has you on the glide path, the right glide path that I can help you with this big picture chart. Thank you.